Hi, everybody. Eddie here. Going to do a market update for next week. So it has been a pretty interesting week. Last week we actually held a key support area. So this area right here that I drawn before, from between 3,900 and this 3,950 area. Well, last week he held this area. We tested once, and then we created like a hammer, reversal hammer on the way back up. And then on Wednesday when JP was talking, we tested that area once again and we bounced hard after we started speaking. All right. So now we broke through the 200-day moving average. And on Thursday, we retested 200, and Friday we broke through it, but we end up closing above it, right? So this is actually pretty bullish sign. As you can see, we held this channel the entire way up, and we still held it. We're still above that 21-day moving average, and now we're above the 8-day as well. So next week, if we can hold on to this 8-day moving average in this 200-day, it's likely that we can go back up to this 4,200 area. So this is the next target. After breaking this 4120 area, that's the next targets right at 4,200. There's also a gap that needs to be filled up here as well at 4,230. So, you know, the chances are we could get a rally all the way back up to here, right? So next week, what you're looking for is, this is the key area to hold, is this 40 20 area, 4020 to 4050, right? So this area needs to absolutely hold for this trend to continue to go up. If we break through this area here, it's going to come retest this 3,900. So 3,900 is a key support on the way down. So it definitely needs to hold that area in order for us to continue higher. If it doesn't hold this area, it's likely we come back and test the lows and then maybe get our next leg down. Although I don't think we'll get our next leg down this year. It probably will happen next year sometime. But this year, I think we're going to end up higher. So we're looking at this 4,200 area. And it's good that if we come back and we test this area once again. So if we test this area and we hold on to it next week, it's likely we're going to break above this key resistance right here. So this is where majority of the supply is, right up here at this 4,100 and 4,150 area. Once it breaks through that, there's not a lot of resistance above, right? So it's likely to come, if we break through this area, it's likely to come up here, fill that gap, maybe even test this high of 4,300 right here. And then, you know, if we break above this high right here, that's breaking out of this megaphone channel, and it's good to break out of it, come back to retest, and then go higher, right? That's the best bull case scenario, is to have the confirmation of a retest, right? So if we have a confirmation of retest, then it's really, really bullish, right? That means this is the bottom, we're moving forward, right? At this moment, we're still right at the edge, and it still can go either direction. So on the upper side, we're looking at this 4110, 4150. On the bottom side, we're looking at this 3,900 area, 3,900, 3,950, around there, right? So this is the box that we're looking at. Above, we're bullish. Below, we're bearish, right? So in between is just going to be chopping around. So you just trade the different levels that intraday. So we're still trading intraday, but I do have some swing positions on now. We'll talk about some of those later on in the video if I can remember. But right now things are looking pretty good, right? As long as we hold this 4,000 area, 4,000 to 4050, we're bullish, right? As long as we hold that, we're bullish bias. All right, so that's what we're looking for next week, is to hold this area and continue forward. The key here is to set that alert right here and break that high. If we break that high, we're going to test this area right here, right? We're going to test this area, and then we're going to go and test this area, 4,200 area. So that's pretty well the key resistance we're looking at now, is to break above this supply zone right here, come up to this 4,200, maybe pull back, retest the supply zone, and then go higher. right? That's my bull scenario, right? The bear scenario is we hit here, we get rejected, we come down, we break the 3,900, we break this 4,000 and come down to 3,900, and then right here we could come back to as low as 3,800, which is another key support area, right? So as long as you can hold like somewhere in between here, we're still bullish. Like as long as we don't make a new low, we're still good, right? But it's once we break below the 50 moving average again, it's going to be very bearish, right? So at this point, it's pretty neutral, but with a slight bullish bias. And of course, I don't trade with bias. So if I am bullish, say today I'm bullish, and then on Monday we get a big red candle, well, I'm switching to bearish, right? I don't fall in love with stocks, and I don't fall in love with bias or direction, right? If price changes, you change with the price. That's how you trade this market, right? If you hold on to your bias, you can't make money in this market because it changes way too quickly, right? So just make sure that if you're bullish, right, keep your stops in place, and then if it reverses on you, switch to the other direction. All right, let's take a look at the Qs. So Qs are starting to move up very, very slowly. It's considerably weaker than the SPX, right? So we're above the low right here. We tested this breakout area multiple times and held. We're right at that resistance. We couldn't break above it last week. So this is a key area to break, this 295. Break above that, you need to go above this area right here, 310, right? 310, 311, break above that, and it could go, right? So right now it's still in a very defined downtrend. As you can see, it's very defined downtrend. It's slowly climbing up, but there's no clear sign of a big breakout just yet. It's still struggling right here. Right, the last time it struggled here, it tested a couple times before it broke out. So hopefully that's the case right here as well. The only good thing is it is making a higher low, so it just needs a higher high and then another higher low and then break out. Right, so that's the way I'm looking at the Qs. It is lagging the other sectors, just keep an eye on it. So if it start catching up with the other sectors, it could be a really quick reaction on the way up, because these high tech names, when they go really quickly. So you might miss it if you went in too late. So just keep an eye out on these key levels, and then if they break above the key levels, just go enter and then set your stops. All right, let's take a look at IWM. So IWM still in consolidation mode. It is above the 200-day moving average, right? This is the key area to break, because you can see we already set my alert right here. So I'm looking for it to break above here and test this high right here, right? Test this high, we could come up to 210 area, which is a major resistance, because that was the area it broke down from. So there's a lot of supply up around this region right here. All right, so if he can actually run all the way back up to here, I'll be happy already, right? Because by the time he ran up to here, a lot of the growth names will be significantly higher and should be breaking out their bases, right? Because a lot of the small cap growth names are actually breaking out bases right now, or actually basing. So last week I did buy two smaller cap growth names. We'll talk about a little bit later, and they've been performing fairly well last week. So mid caps are doing good as well. We're right back around this key supply area right here. So if we can break through it, mid caps is actually leading all the other indexes right now. So it's kind of a sector you want to take a look at right now, to look into this ETF to see what is the leading stocks within this ETF, right? And then you can pick and look at those charts to see if they have good setups. They're good setups. Just go in, set your stops, and hopefully you'll play out. One really interesting is the VIX. The VIX is under 20 now. This is the keys area where a lot of bad things can happen. Because every single time we tested this area in the past, we have a huge rally up on the VIX, which means we get a huge pullback on the SPX. See, last time the VIX hit that area, pullback. Last time hit there, pullback. Right, so this is a key area to look. I'm gonna set my alert above 20 now. I had it set below, so when it was up here, I set it below. if it actually start bouncing off here and start coming back up and leaning towards 25, most likely that the SPX will have a big leg down. How big? Don't know. Right. But I am looking at those areas we talk about, which is 3,900, 3,800 as key supports. So I am also looking at the VIX to if he bounces, that's also the area is about 25, 26. So if he doesn't go any higher than 25, 26 and then start coming back down, then it's a good sign. That means we're the fear is not as high as we thought, and then the market can continue to go higher. Because right now we're below 20, so it's actually a good sign if it just stays below 20. That means the market will steady start going back up, but it's the bounces that's what you're afraid of. So every single time it came down here, it did bounce. So pay very close attention to the VIX to see if it's going to bounce. If it's not going to bounce and we're going to just keep dropping, you can see SPX keep climbing, right? So this would be a good tell for you to watch. So like if you see from before, right, we tested the area multiple times, and then finally it broke down and started just going down to 15 and just hover around 15. That's a good bullish sign. So hopefully if that's the case, and then it just drift down to around 15, that means the market's going to keep climbing up. All right. Okay, let's take a look at some stocks. Actually, let's take a look at the indexes. One index that I'm actually trading is a Chinese index. They're so out of favor, and they're talking about reopening next year. So there's a lot of accumulation happening right now. So you can see there's huge spikes in volume to push this thing back up. We're above 200-day moving average. This is Chinese tech, by the way. So this is one of the sectors I actually swing trading in. I bought the JD, I bought Beely, I bought the was it PDD, and I also have like Neo and stuff like that as well. So they are actually start moving. So it's I am keeping a tight stop on it, so that if it does come down, I'll get stop out because to lock it in, because we start buying it down here. So it's up now. And I raised my stop, so it's basically a risk-free trade. So if I actually keep moving, I'll just keep raising my stops until I get stop out. If it comes back, I wouldn't be losing any money on this trade because I caught the first move. So another sector I was looking at is the financials. So the financials right now is holding like this double bottom, and we're at the neckline right there. You want to see this start breaking out, because if financials start breaking out, it's a good sign that the market's starting to stabilize. But if you start pulling back sharply, then we're not quite over yet in this bear market. So just keep an eye out on your financial sector. We are at this key neckline where it broke down from, and there's a peak supply right around this area right here. So just pay close attention to this block up here to see what he's going to do next. If he breaks out, it's likely it's going to go up to $40 right here to go all the way back to the top. It's going to test this high supply area, and then you might get a overall push up here before retracement back. Excuse me. So let's take a look at the FANG names. So Apple right here is creating like a nice little base. It is kind of somewhat of like of a triangular pattern right here. All right, so it's consolidating within this little range, and what you want to see is break out of this range above the 200 and above this 157 area. Once it breaks above here, these are your resistance up top. So if Apple start moving, it's likely it's going to pull the rest of the techs up, and that would be a really good sign, because if that is the case, it's going to most likely pull SPX way up, because this is the lagging sector right now. It's not the leading sector usually out of a bear market. These are the leading names that take you out of the bear market, but it's not doing that right now. That's why I'm still being very cautious, right? So that's why I'm only swing trading very small with tight stops. Otherwise, I wouldn't be doing it at all, because the leading names are not moving. Right, it's value names that's pulling the market up right now. Is not the tech names. So I'd be very careful until the tech names actually start coming back up as well. Then I'll be going in with a little bit more aggressively. So AMD has like this little cup and handle thing going on right here. So we hit our first target, which is around that 70 to 80 area. The next target is around that $90 area, right? Around this 200-day moving average. So this is a very key resistance area. As you can see, this was the area we broke down from. So it's going to take us some time to break back above it. It is like somewhat of a cup and handle. It is consolidating right at the neckline. So you're looking at if you want to break above this area or break below this area, right? So this would be your box. If it breaks above it, you could go for long from here to 90. If it breaks below, it might come back down to around that 65, 60 area. Amazon is back in this base again. It is consolidating again. Looks a lot like a bear flag. But this is a pretty good area to actually own the stock. So, you know, I was actually looking at this last week to sell some puts at $70, but there wasn't a lot of premium on there, so I didn't do it. So I'm kind of waiting for it to come down a little bit more. If it comes back down to around that 85-ish area, then yeah, I'll sell some puts. I'll grab some shares and see what happens. Because right now it's not doing anything. It's a very strong downtrend. We're below all the moving averages, right? So right now we're just kind of waiting for it to base and then start turning things around, right? The best time to buy these stocks is actually when you start turning around. Guessing the bottom can be pretty dangerous. So unless you have a lot of capital and you are planning your trades, like I want to start off with say 100 shares, aiming for 1,000 shares, then yeah, start 100 shares here is no problem, right? And another couple hundred here, and then you know once you start hitting some of these bottom, go in 50% of the maximum, meaning going in maximum 500, and then as you start coming back out of the base and start going back into uptrend, that's when you add the other 500. Right. So that's always your game plan. You want to do this long term for investing and for investing only. For trading, no, there's no trades here. Right. So that's the play. And I am only looking at this for more of a longer term play, not really for trading around. Right, let's move on. Meta's bouncing off that bottom. So a couple weeks ago, I said that Meta down here was a little bit investable. So I didn't actually go in. I was watching it. I wanted to go in, and then I think overthinked it a little too much, and it just ran at me. But anyway, down here, it's good sign we're above the 821.50. It's going, if it's going to come up, it's going to test this 140. It's going to test 160. 160 would be as high as it probably would go before pulling back. So, you know, that would have been a pretty good trade. You can probably sell some puts below this 105 area if you want to take some shares down here. But yeah, I'm looking at this thing, and I'm looking forward to base. I'm looking for the 200 to catch up to the price before I start going in with size, right? So I need to come this 200-day moving average come close to all the rest of the moving averages, and then I'll look at going back into it. Google. So Google has like this V-shaped bounce going on. It's consolidating. This is more like a neckline right here, because you can see right here, that's the peak shelf up here. And if you can break this peak shelf, it's going up to here at maybe between 110 and 115 area. That's the next target if it can break this 105 area. Right. I'm kind of hoping for it to come back and retest this 80, 85, 88 area, because I want to get in some shares cheaper for longer term, and that's the area I'm looking at. Now that I see that it bounced the first time, I want to see it reconfirm that this is the low, which means a retest and then a sharp bounce. right? So if it comes back down, retest here, and then bounces sharply, then that's my buy signal, right? So I am waiting for that and see what happens. It is still below the 200, so I'm in no hurry getting back into this stock. It's just that I want to get a starter position on, and then I can start doing some income strategies around my shares while I wait for the stock to actually bottom out. Microsoft holding quite well. We did break above the neckline. It came back, retest, and bounced back up. So that's a really good sign. I would say that Microsoft is the stronger out of the FANG names right now. And it's pretty close to that 200-day moving average. That 265 was the target. If you can break above 265, you're looking at about 280, and then possibly this 295, 300 area to fill the gap at 300, right? So it could be a pretty quick bounce. Like I said before, this is a pretty good buy zone right here for starter precision. And then once you break above the 200 and hold above 200, you can start adding. Also for longer terms, right, so Netflix almost close the gap right now. So if you sold puts or spreads on this thing, you're making money already. And you know, once that gap closes, that's a pretty good area to pay attention to, because you'll either get rejected or it's going to come back up and test this 396 area, right? So if you can test 396 area, I could say that this is potentially the bottom, because we are above the 200 and above all the moving averages right now, so it's good. So next earnings is your key indicator. Next earnings, you want to see subscription growth. If there's subscription growth, you can see this thing gap up. There's a big gap here that needs to be filled as well. So if that's the case, most likely you bounce all the way back up to here if there's a big subscription growth, right? Everybody's right now is waiting on to see what's happening with that new subscription with the ads, to see if it's actually working. If it's actually working, then maybe you'll come back, right? If not, then you know, expect another gap down, because earnings for Netflix is just crazy every single time. You see these big gaps is all from earnings. So pay very close attention to what they say in the earnings. They also make great names for playing lottos during earnings, because you can probably go in with a long strangle, and if he drops or pumps more than 15%, you can make some money. Nvidia, so Nvidia is right at that resistance area. So that announcement that they're going to make chips specialized for China that they can ship to really boost the stock up. So you know, it is performing better than AMD because they announced that. So you know, right now it's showing some signs of strength. This is key area 180, and then it goes to this 195 200 area. So if you bounces up to 195 200 and then come back to retest 180, that's a strong side that you know, potentially we have a bottom, and then we're going to either consolidate and break out, or we just slowly climb back up, right? So that's what you're looking for Nvidia. And right now it's not a buy point. A buy point would be good if you actually break out and pull back into this area, because you need confirmation that that we're going to continue higher. Right now, we're still in a very strong downtrend. We're still below the 200, so there's really no buying opportunities that we're above that. You can always day trade this if you really wanted to, or wait for a pullback to 150 area to see if it holds. If it holds, then maybe there's a play from 150 to 180. Tesla. So Tesla is trying hard to hold on to this major support area right here. This neckline, it briefly broke through it, and then it came right back up, right? So it's a good sign. It needs to hold here and needs to break back above 200, right? If you can break back 200, you're looking at this 220 to 240 area to come back up to. And if it does come up to 220 to 240 area, that's a good area to get rid of some of your shares if you're bag holding this, and then leave some on there to see if you're going any higher, right? If it doesn't, that's where you set your stop slightly below it. So that's the way I would play Tesla. Other than that, it's not an entry point right here, even though it can go up. I choose not to play these type of charts anymore, and try to guess the bottom, because these stocks tend to be pretty volatile, and if the momentum is on the downside right now, so even though it's rallying up a little bit right here, if it hits, say, that 220 and then get rejected, it'll be a sharp rejection, right? You see how large these bearish candles are, right? If you get caught in one of these days, then that's a lot of losses already in one day. So just look at how big these candles on the way down is, right? Because it's in a downtrend, that's why, right? And these tiny little up candles right here, it's not worth it to go long right here until we break above like these key resistance areas. And maybe if he holds around these resistance areas, then there potentially is a play on the upside. But as far as it is right now, it's still very bearish looking chart. We're still in this big head and shoulders pattern. We're at the edge of that support line, so you can go either direction, right? The first sign is above 200. Above 200 is good. Go to 240 is better. And then if he once he hits 240, it needs to stay above 220, and then maybe it'll consolidate and slowly grind back up. All right, so I talk about a few growth themes I was in last week. One of them is Etsy. So Etsy was good. I bought Etsy down here before the pop, and then I did took some profits on the first pump, and then went back in right around here. So it's performing pretty well. It was a really nice consolidation bottom. You can see right here is kind of like a cup and handle base. And then we finally breaking out of the base. So it's approaching my target ranges. So I will be taking some profits. I did take some off a couple days ago. I only have a half position on right now. I'm in it with options as well as I am with shares. So with shares, I have a tight stop on with the shares, and then with the options, I'm just taking profits on the way up. I already doubled my money with the options. So basically I took half off, so the rest of it is free play. But if it's breaking back below this 130 area, I might take the rest of it off. But right now I'm aiming for 150 and 160. 160 would be 160, 170 would be the peak resistance area. This 150 is also a pretty strong resistance area. So I'll be taking some off right here. It's most likely hit right here, pull back, and then go to the next leg up. So I'll take some off here, and then if it pulls back and holds, I'll add it back on. That's usually how I play these type of names. So this is a really really good play, that swing trade that we had. And it wasn't a big size swing trade. It's still small size because we're still in a bear market. So even though the names look good, I kind of hesitate to go in with any size at all. So kind of testing the waters here, and it's been working out. So now that I made some money with this, maybe the next setup I'll go with better size, and then use the profits as my stop loss, and then I can grow bigger that way. INMD, this is another growth name that we're looking at. I enter around this consolidation range right here. We got a little pop. We did pull back. So it's still not showing a lot of strength just yet. If it breaks above this 42.50 though, there's a leg up to around this $48-50 range, right? So I do have my stop below this consolidation range right here, below just slightly below 35. And then let's see how this one will take us. And there's some other names that are actually performing quite well, like Bitcoin is start making a slight comeback. If you go into the smaller time frame, so Bitcoin has this high, higher low, higher high base thing right here on the hourly chart. So if you can break above 17,500 above this 17,500, then potentially you'll go to 1,800, and then possibly 20,000, right? So there is a pretty good size base right here. So if it does go for a bounce, it's a very short-term play. And this is just a trading instrument. You don't really want to know how I really feel about crypto. So this is more of a trade. So if you want to take a trade, all right, there's this you take a stop below here. and then you're aiming for right now 1750, 17,500, and then 18,000 is your last target for this for a trade. So to trade some of these, you know, you could do something like a Mara or whatever, right? Mara's breaking out this base, is heading into first resistance. Breakthrough here, you go to 850, $10. So you could trade that way if you wanted to, but I wouldn't put too much money into this. This is more of a trade. It's not investing. You don't want to invest in crypto at all. Just want to trade it. Anyway, that's pretty much it for stocks. Let's take a look at the algo. So we had a really good Friday with the aggro. So the aggro right off the bat was a buy signal. You didn't get a sell signal till midday, and then as it consolidated in the afternoon, there was a buying pump to close that gap at the close, right? So that was a fairly good play for Friday. There was this little consolidation error right here that would have fake you out. But if you know that in the afternoon there's tend to be consolidations, then you know you would have avoided this, right? So normally in a play like this, you're only looking to buy because the 5 minutes is in a buy. So you always want to trade in the direction of the 5 minute. So the 5 minute never really got a sell signal, right? Oh, sorry, this is the 5 minute. So you try to trade the 2 minute off the 5 minute signal. So while it was in a bull phase right here, you're only looking to buy on the 2 minute for scalps. So like from here to here, here to here, here to here, right? So you're only looking for buy signals when you're doing that. But to trade this, it's good to have a chart like this. This is how I set up my algo. I have the actual candlestick chart, and then I also have my levels, my support and resistance level, and then I also use the algo for confirmation of what I see off these, right? So if you know anything about day trading, right, we're going for trends. We're looking at VWAP, we're looking at support and resistance areas. So as you can see right here, we got the buy signal right after start. So you can see we're buy signal, we're above the VWAP, right? We continue up, and then once we start hitting these resistance areas right here, you start getting a sell signal. The sell signal, it comes in a little bit later. It comes after it breaks the consolidation, right? So that's the area where you exit. So if you enter down here, you're exiting over here, and then as you start pulling back, it's still staying above like the VWAP, and we're testing this high right here, right? So you can see that it did consolidate like a little bit. So as you can see right here, we get like these tiny little buy sell signals right here. But as long as it's holding this VWAP and making higher lows, it's an entry point for a buy once the buys start coming in, right? So it's not buy right here until it's staying above the moving averages. So you can see it was just consolidating, right? If you understand this, then you would have avoided this little congestion area right here, and then you would have buy right here when you start breaking above the consolidation area, which is that green candle right here, which is also your buy. See, the algo is programmed to think like what I'm thinking, right? Using confirmation of trend change to go into the stock. So this is the confirmation right here with the big bull candle above the consolidation range with a stack moving averages. So this is a good buy area right here, and you would have caught the pump, and the target was the gap fill. So it went exactly for the gap fill, and then it retraced back into the close, right? So if you caught this move up here, hitting into this resistance, that's your first trade. Your second trade will be right here, catching right here. So you would have caught two really good trades on Friday. And if you scalp, you could have scalped this as well, like this double top right here. You could have scalped it down to around that 50-day moving average, which you found support right here. All right, and then let's go day back. Right. So this day right here is a little bit different. So this day was initial drop. This is an open range trade. So I teach how to trade these in my course. So it broke the opening range. You get that flush down with the algo, right? But once you get that flush down, what happened after that is this tight chop right here. This is about a 3 points, 250 point, $2, 2.5, yeah, 2.5 SPY, which is about 25 points on the SPX. So you could trade it with the shorter time frames, like the 2 minute, right? You could have scalped it. But these are the times where you really don't want to hold on to your trade because it's just consolidating, right? I did tell my Discord members that we are most likely just consolidate the afternoon. And that's what it pretty much did, just went sideways, chopped the whole day because it was a consolidation day on the daily chart. So if you understand how to use multi-time frames, then that's what you look for to give you some bit of an edge. Right. Now, FOMC day, that was the big day, right? So we had the initial down trigger right here in pre-market. We caught it down to this area. This is one of the support areas that I mentioned in our pre-market analysis, which is 393.5. So it tested 393.5 twice, and it bounced off that level. So once you understand that, you got a buy signal right here right before JP started talking was a buy signal, and then all you had to do is ride it until you get a sell signal, which you did not. Even on the 2-minute time frame, you did not get a sell signal, right? So even if you were scalping the 2-minute, waiting for that sell signal, it did not come, meaning you could have caught this entire move up, right? This is what I call a week maker, meaning you made enough money for an entire week and you don't have to trade for an entire week, right? So I did a huge play right here. I originally going into JP, I had puts, and then those puts did not work out, obviously. But I changed direction once I start seeing like after JP start talking and the momentum was on the upside. So I switched to calls, made all my losses back. Plus I 10x my losses. Right. I just keep adding on to it because the trend was so strong. And if you understand any of these big talks from JP previously, every single time he talks, wherever direction he goes, it tends to go 100 points, right? So if you understand that, and then you got into puts and you were on the wrong side of the trade, just switch to the call side, and then you make your money back, right? So if you start moving, and then as long as the algo holds on that time frame, every single time he pulls back, just add, right? And then you get these big plays, right? Anyway, that's pretty much it. And we had a really good catch-up session with how to use the algo, and we also went a little too far and talked about technical analysis, talk about psychology, trading, management, risk management. So that was a really good recording. I taught about 1/3 of my course in that free session. So if you want to watch that free session, it's going to be up temporary for about a month time. So you want to join the monthly Discord, you can watch that video, learn some in-depth stuff, and get a glimpse of what I teach in my advanced day trading course. And that's a good way to get into it. It'll cost you 1 month subscription fee. You can test out the algo as well, same time. So anyway, make sure to like and subscribe, and I'll talk to you guys next week.